Hello and good morning, guys. JJ Edwards here with another tape reading. We will be using volume profile and fair value gaps, also institutional levels for support and resistance level. We are looking at Euro futures chart. We will have a tape reading on this live market, also execution if I see any opportunity. I would like to go to 1 minute chart to have a better perspective. So over here, we do have a high and a gap in this area, which the price respected once, twice, returned to this area, but at the lows, we have aggressive things. Look at the cumulative volume delta. Cumulative volume delta makes a new low. That means these sellers are pushing, but they're not getting the price anywhere. We have this high. The London session started around half an hour ago. We are in this gap. Based on the cumulative volume delta, the market is bullish. We can go with 2 contracts long in here. And for this reason, we have this order block. This is the last red candle that resulted in the price to go higher. Therefore, we can leave our stop at the low of this candle and eventually wait to see how the price reacts to these highs. We have the value area high in here. Currently, the price is above the point of control, which has 2,000 contracts on it. You can see it here. Let's go to 5 minutes chart to have a better perspective. I wish this platform had 2 minutes chart because that's my favorite. I'm not using trading view platform because I like to utilize volume, and these are the high quality volume. It's a real volume. It's not something fake. So that's why I'm using. Over here, we have a new weekly opening gap. I opened this trade because I am suspected that based on what I saw, a new low in the cumulative volume delta. You see the cumulative volume delta made a new low. The price didn't. That means all these sellers were absorbed and the value area high is right there. Once we break above this level, we can expect the price to go even higher. So over here, I would like to have my Fibonacci on to measure this gap. Also, I want to have the anchor VWAP from this low. Let me go to the settings. I want the source to be low because I'm drawing it to lower prices. Let's make it yellow. Let's make it green. So we have our support in here, which is this VWAP. At the lows, this is a bear trap. Learn more. Full guys, it's very beautiful. Please pay attention to this part. Please pay attention. It's very beautiful. So we have this VWAP. The price took this low in here, took this low right there with this candle. And then what it do? More sellers came in, but the price rose. That makes this portion right here a bear trap. Beautiful. Things like this happens every time. Now I have my bear trap. I do have the price that stays above the VWAP. I have my cumulative volume delta that shows sellers stepped in after they saw this bearish breakout, which is a fake breakout. That the price should go higher. How long it should go, I need to draw my Fibonacci on these levels, the Fibonacci retracement. So on Friday, we closed here and we opened all the way there. So 50% is the minimum that the price can go higher. That 50% is 1734. Yeah, 1733. So over here, I would like to close my trade. I don't want to risk even more than that. 1733, 34. Let's see. 17339. Because of a spread, let's have it 1 pip down. 33 is okay. All right. Now we are slightly above the value area high. This high cannot stand between the bulls and the bears, so they would probably fail. It can go higher and take 1733 with ease. Easily it can go there and take that high. We are about 23.6% of this gap. 50% is the minimum. That's why I do expect the price to go higher and take this thing. So let's go through this process again. Why did I take this trade? Why did I leave the stop loss the way it is? So we started the London session. When is it? Right around here, this bearish candle. Yeah, right around here, 3 a.m. Yes, this bearish candle here. That's when the London session began. So we started the London session, the market was bullish. But as we know, the London session literally actually starts at 2 a.m. So at 2 a.m. we had this sell-off all the way down here, took a liquidity below this low, and also tapped into the liquidity below this low, but stayed above the value area high. Let me remove myself. Like a volume profile, you see that on the left side, it stayed above the value area high, which is 17,095. There we go. That's a value area low. That's the lowest price sellers were willing to sell their shares. Let's go to 1 minute chart. After that, after respecting the value area low, which is here, the price returned above the VWAP, which we anchored it from the lowest price. Let's adjust it here. It's anchored from this low, returned above it. We have this fair value gap. At first, it respected to this gap, which is value area high. Retail, ICT retail traders would have executed this trade. They would have gone short in here again, but not volume traders. And volume traders, the cumulative volume delta has shown that yes, volume made a new low, but the price didn't. That makes all these sellers trapped starting here. Those are the ICT traders. They waited for the price to enter this level and go short again. Here I show you what I mean. This is the fair value gap. So ICT traders would go short as soon as the price re-enter this area and this area. But the fact is we have a gap on the highs. The price didn't fill that gap. We are looking for at least 50% of that gap to be filled. We executed 2 contracts at the highs, aiming for the stops above this high. And currently we are backed by point of control and also value area high. Therefore, I would like to move my stop closer, make it $75. After the price goes to 50% level of that gap, we might go short. Depends on what we'll see on the chart. It's only a few pips left to our target, which is 1733. Now we have this order block right here, which happened inside. So in this order block, there were sellers, more ICT traders sold in this gap right here, and they are utilizing this gap and these sell orders to fuel their buy orders and take the stops and limit orders above this high. Now I can move my stop to plus $37 below this order block, and I am positive that this buy order will be taken. After that's taken, 50% level is done, then maybe we can go short on euro. We have a rise in the volume as well, so buyers did came in, but the volume did not make a new high. That's making even this bullish move a fake one. So it's fake in fake. We have 2 traps. Sellers are trapped, and now they're planning to trap the buyers. As soon as the price gets to 50%, and when I see how the price reacts to that level, I will have more data and information to plan my next strategy. Looking at the lows, beautiful U-shape return. That's a U-shape. We are $187. Our target is $237. I left my TP 1 pip or 10 points below the 50% level of that new weekly opening gap, because I do also have to pay for spread and commission, but I always use 1 pip or 10 points lower my target level. Okay, the order is filled. That trade is done. That was a success. Let's go to 5 minutes. It came almost to 50%. Let's see if it can fill this gap all the way to 50%. If it doesn't and bounce from here, that makes the market still bearish. So we are looking at 1734. Let's have our mouse on this price. See if it would tap into it. If it tap right into it and have a reversal or shows bearish signs, then we can again go short on. Let's have that on our chart. That's the level. Let's go to 1 minute. 1 minute shows buyers stepped in. The price made a new high with a very low volume. That makes this move fake. How do they make this move? Is when the price is moving higher with low volume. Allow me to show you to add the camera on. When the price makes a new high with small volume, that literally means the institutions or whales, they have removed their pending orders. They're literally allowing retail to do what? To push the price higher with small volume. So the price is going higher with a small volume. Price makes a new high. Volume doesn't make a new high. That means passive sellers, they are not active or they remove their orders. When that happens, a fake move like this, as you can see, the fake move like this occurs in the market. Now I want you to pay attention to this gap. You see that the price returned and filled this gap, then tapped into 1734. What I do is now that we have a new high, I would like to see all these bullish candles that make that high. So here's what I'm going to do. From this low to this high, we have this portion. Is this a bearish order block? Are they going to sell from this area? Let's go to 5 minutes, see if I can have a VWAP from the highs. I'm going to use my anchored VWAP to this high. I'm going to change the settings to close, to high, and still have a bit of distance. That's 61.8% of the gap, which is even better. Let's go to 1 minute chart. We might have a quick scalp opportunity in here. Let's look at the candles and the volume. We have two tiny sell volume. The second one is absorbed. You see, the delta is negative, but the candle is bullish. That means sellers are absorbed by pending order buyers. This means we might have another bullish leg, perhaps to that VWAP. I don't need to this one. Okay, let's adjust. We opened here. That's where we opened. Can I extend this? Yeah. Let's go to 5 minutes. I don't need this line. Let's have our chart a bit more cleaner. So we are right at 50%. I want to see if the price would get to 61.8%. That area is in conjunction with that VWAP I showed you from this high. I don't know where did it go, but it's okay. It's around 61.8%. Let's see if I can get over here on volume profile. If you can see 428 contracts stepped in, we might have a short-term opportunity to sell in here. I would like to use this gap, the higher portion of this gap, to go short. Okay, there's a sell limit in there. I will leave the stop at the highs and I would like to close it. The stop should be at this high. And to close it, I can look at these gaps in here and the value area high. Value area high would be nice to close it. We have this gap. So we have $50 at risk. Let's see if we can make $100 from it. Yes, we can make $100 if it returns to this gap. Let's see how this is going to play out. The reason I took this trade is that I have 424 contracts executed at these highs. So this could be for two reasons. Reason number one is the bulls who start buying at the lows, they took some profit off the table. That's one reason. The second reason is that I know, based on cumulative volume delta, this bullish move is happened with small volume. That's another reason. We are having volume, we are having a bounce after this bullish move. We do have these gaps, and the price tends to return to these gaps if it wants to go higher. Let's see how this trade plays out. And this would be our last trade for the day. If it takes my take profit, if it takes my stop, I will stay on this live tape reading with execution and education all the way until next trade. So we already have one profit taking around $250. I don't remember, $250 or so. The second one is 100. Let's see if we can close Monday on April. Is it April? What's the date? Yes, April 13, 2026. There it is on the chart. You can see it's 13 month 4, 2026. We are having that drop. What is that line? 38.2%. So return to 38.2%, which is above this high. But this gap is also in conjunction with this gap. So the price can potentially return to the same inverted fair value gap that happened here. The first touch was good, but the second touch and the third touch, no. A bear trap happened at the lows. If the volume was not making a new low, yes, I would short it in here if the volume was in sync with the price. But since it is not, I rather to do this instead. All right, where the price is going, we have another gap. We can add one more sell position in here. Let's see if we get a fill to make it 4 contracts right there in this gap, because we have a sell-off. This gap, let's see if we get another entry. The second order, which is 2 contracts, is filled. Now we have 4 contracts on. The risk is $112. The reward is $187. The price is always tends to return and fill those gaps before it rips higher. The $112 in profit, the price is kind of lingering around 1729. That's 30-ish% of that new weekly opening gap. We are 1 hour into London session. It's almost 4 a.m., 3 a.m. My chart data is not correct. It's based on UTC -5. I have to set it to UTC -4 to fix that. Let's see if the price would return to take this gap. It's taking a bit longer. The market is very slow, which is a usual thing for Euro futures. If you're trading Euro futures or Euro dollar or any currency pairs, these are slow currencies. And it's nothing like NASDAQ or S&P 500. I go and trade live every day during New York session. So please make sure if you have any questions, come to chat, visit me, ask anything you want. I try to give as much as information I can on these tape readings. But if anything is vague and you can't understand, you can come and ask me directly during New York session when I'm live. London session, I do the tape reading. This way I don't have the chat to distract me. I can provide all the information that I can. It has 1 pip to my profit. Let's see if it would go all the way there or not. It is taking longer than what I expected. After this trade, I will close this tape reading. I do this, I will try to do this at least twice a week for the London session. New York session, I am live every day because I do love trading NASDAQ. It's 1729. All right, the TP is hit. That's how we do it. Once again, let me go through it. I said if this is an order block, this order block has a ton of gaps. At the highs, I have seen 420 contracts right here. Look at here. 424 contracts entered in this portion. That could be what? Profit taking. The volume, price made new high, volume did not make a new high. That makes this bullish run. A thin liquidity, which in my opinion could be retail buying or small institutions buying. And the whales, sharks, they allowed the price to go higher by removing their pending orders. Well, that's about it, guys. I love you all. Thank you for watching, and I will see you in the next tape reading. Until then, trade safe, be patient, and be observant. Peace.